Welcome back, Alpha Hunters. Oh man, what a week. We just closed the week for a week of May the 20th. And what a week it was. It was a week, man. That's about all I can say. So I'm gonna start off real quick because there is an issue kind of going on in the consumer space right now with the baby formula shortage, okay? Guys, if you're a parent and you needing the baby formula, man, my heart goes out to you. That sounds like such a desperate grasp of air that there's just no air to grasp there. So I really do hope for you parents out there that supply chain crunch kind of gets filled and they figure that out. So let's talk about what went on this week with the market. So it was an easygoing week to start. It wasn't much going on. We just kind of trickled up a little bit as the norm on Monday, and Monday actually down a little bit, Tuesday up a little bit, but we retested into some previous resistance areas. I don't really think that was the main thing, though. I don't think it was really a technical thing. I think it had a lot to do with some data that came out. Now Tuesday and Wednesday, really, there was some earnings that came out from Walmart, Target, and then some retail data. Okay, so I'll talk about that here in a little bit, but that spooked the market and we opened down basically 1% from Tuesday and then sold down the whole day. Thursday just opened down, traded up, and I was talking with a buddy of mine. I was like, this is the candle I didn't want to see, because I figured if we saw this candle come in on Thursday, that Friday we would sell down and we'd probably just get a flush out. So that seems like what we got here today on Friday. Now, I know that there are a lot of people freaking out. Man, I know it because I saw how many videos my channel's been getting, especially over the past week. I know that there are people out there freaking out because I also see a lot of thumbnails out there for videos. I also see a lot of people talking, oh, crash, crash, crash. You see the thumbnails with the fire lighting it up in the background on some thumbnails on YouTube videos and stuff like that. People just talking crash. So, guys, I'm trying not to be like that. Okay, I don't want to be like that. It's just calm, collective. Let's just wait for whatever kind of bounce we get on the market, and then we'll reassess and reposition. We're not going to just waterfall off and just keep selling down to 300 or whatever. Okay, and even if we do look here on a weekly time frame, we are now down 7 weeks in a row. That is something that doesn't happen normally. That is very abnormal. And one of the things actually you don't see all too often is you see a weekly candle close above and below the previous week. So you usually don't see that. Now, the times you do see that is more in like bullish trends and not so much bearish trends. Bearish trends, you don't really typically see that, but it is one that's very interesting to see. So let's go ahead and talk about what we saw this week from some retail data. This was some of the biggest news of the week, really, was retail data. So we had some retail economic data come out. It was pretty bearish. I won't really go over that, but I want to look at Walmart, and then next I'll look at Target. So Walmart came out and they missed some earnings. They actually beat on revenue, but they missed on the bottom line, okay? And Target's basically the same way. It was just more extreme, and I'll get to that here in just a second. But they missed bottom line earnings by 12%. Walmart did, WMT, okay? So that wasn't good. Obviously, Tuesday then had Walmart down pretty good, but the market was still okay. The market was still okay. And then Target came out and had their earnings then Wednesday morning, and they had absolutely awful bottom line earnings. They actually missed the bottom line by 28%. But both companies, okay, so this is a point I want to make sure we understand. Both companies actually did beat on the top line. Where they missed was cost of goods, and like transportation costs are really starting to eat away at margins. And so their margins are getting cut down. So we can see inflation is really starting to eat away and deteriorate some of the corporate earnings that have been coming out, okay? But as far as like the consumer side and possible GDP numbers, I think they're still gonna be good, okay? So GDP numbers I would expect to be fine for now. And then the consumer, they're still out there spending. They're still out there spending. Now, there's two kind of parts to the consumer. One of them is like a consumer survey, like what the consumer's actually thinking as to what they're actually doing. Okay, what the consumer's thinking is not exactly the most bullish. They're actually not feeling all that well about certain economic scenarios, especially like inflation, stuff like that. But as far as how they're spending, they're out there spending money. They're out there spending money, so it's not really a big deal. It doesn't seem like they're even slowing down either. We'll just kind of have to see how that goes. But these two stocks, you know, and how they affected really the market this week and the consumer staples. Now, this is the XLP, the consumer staples ETF, and it just, Wednesday just got slaughtered. And when you are going into a market environment that should be more leaning towards defensive names like consumer staples, we should not be seeing this. This was the consumer staples ETF here was down 6.5% on Wednesday. That is a dramatic move. Okay, that is a dramatic move. And this is something that I think there's going to be some opportunities here. Some other names that kind of got caught up in this was Pepsi. Pepsi got hammered also on Wednesday. Coke, they also got hammered on Wednesday. So there are a lot of names, and you see some buying here coming in today on Coke, okay? But there are a lot of names that are tied to the consumer staple space that are going to be bargains from this week, okay? Procter and Gamble, I'm sure, you know, PG, they got hammered. So yeah, you can see that they're down pretty massively as well. So there are some names out there that I would definitely be buying as we potentially could be going into recession. These companies that they have brand recognition, they have staying power, they have products that consumers are going to buy no matter what kind of economic environment we are in. So definitely look around for some consumer staples to potentially be buying, as I think they just got massively discounted, okay? So I want to review two stocks real quick, mostly because they've been hammered a lot, and I didn't get to them last week as I did a lot of analysis on the market. Review real quick Amazon and TSLA Tesla. So Amazon, this is one that I put out a trade idea back in February, and basically the idea was I could see Amazon dropping down to about that 2000 level, pretty much this line, roughly by mid-summer. I did actually say I was going to buy some September puts, and obviously we can see we pretty much broke all the way down to that level over the past 2 weeks. I would not be looking to short Amazon here or anything. Potentially look to go long for a bullish play. Definitely up to about the 2700 level makes a lot of sense to me. If you get to over 2650 to 2700, I think at that point in time you probably take it off, but not one I'm going to be doing, as I'm already bullish in other areas. But I definitely do like this, as it did get down. A lot of tech names are beaten up, and as the market broke down this week, Amazon did not. So I do think Amazon could be ripe for the picking to have a very nice bullish swing higher before it probably rolls back over. Maybe later in the year, next year, that kind of thing. Now, the other one is TSLA. Now, I do have some friends that they know I've been not exactly the biggest bull on Tesla for a while. And here's a daily chart. I know a lot of people do track this. I'm a big fan of the company and what they are doing. I'm just not a big fan of the stock price. Okay, TSLA, not a big fan at all. I do think we probably see some lows all the way back down to probably the 200 point level. But what I'm looking for now is probably here over the next couple of weeks, I'm looking for the market to push up to maybe the 900 point level before I potentially look to take a position to the bearish side. But that's what I'm kind of looking for. But I have been playing this thing short numerous times over the past like year and a half or so. But I think the next leg down will be the one where it probably takes it all the way down to about 200, as they have a lot of issues, and Elon Musk doesn't seem to be focused anymore with his Twitter thing. So let's see what we can figure out as far as where the market is going now. So back here to the SPY. So I wanted to get a lot of that out of the way because I then wanted to talk about what we can expect in game plan going forward. So last week I did say I do expect us to be bullish, as we've had 6 weeks down in a row now. But now we just put in number 7 down. So, where do we go from here? Well, I'm not exactly leaning bearish, okay? And I get it. We broke down some massive levels today. So I do understand that. And then we actually did hit into this level that you see back over here. There's a line. So this level is from a pretty much a fib number that goes back all the way to the beginning of 2009 to the top of our recent bull market. And that is a 25% pullback, roughly. So that is kind of where we stand with that. And we did pull right into that. We got a little bit below it and then we bounced higher. Okay. And I want to go intraday real quick. I want to go to a 5-minute. What I was kind of talking about with some friends was when we started breaking down and we broke last week's low right here. So when we got to this part, I didn't want to see us just kind of go sideways for most of the day and then roll over at the end of the day. I thought that would have been really bearish going into next week. Okay, what I wanted to see was us get below last week, which we did pretty much right here on this 5-minute candle, and then hang out down here for most of the second half of the day and then start to bounce up. And we did get that. And for the market, which was very telling today, we opened 1% higher. We traded all the way 2% lower and then came all the way back and pretty much ended the day flat, just slightly positive. This was bears and the market setting a trap that, hey, you know what? Let's just flush it down, get everybody down there. You know how many people were probably going bearish down here? Like, oh my gosh, we got below last week's low. We also, since we got below last week's low, we pretty much got into a bear market because down 20% from the all-time high was pretty much just below last week's low. So last week's low right here, that was pretty much going to be a bear market. So since we broke that down, we pretty much got into a bear market officially. But we did not close into a bear market because we saw a very strong buying that came up into the last 2 hours of the day, 2.5 hours. But the last 45 minutes was the time frame that really set it off. When we get to the last 45 minutes here, we just saw buying nonstop, and it pushed us all the way back up over and closed slightly positive. So where I'm thinking we go from here, well, one, I'm not bearish, okay? I'm not bearish. I haven't been bearish since last week, ever since we got down to the 400 level on the SPY. I'm not gonna be bearish because we've been down now 7 weeks in a row. It's just statistics, like eventually it just stops. But we need to see what the market does, okay? Is the market going to just do something squirrely where it just kind of chops around in this zone and then gets pushed down later? Maybe. I doubt that happens, okay? Is the market going to early next week flush down, get below today's low, and then start to bounce back up? Possibly. I don't think that happens. I think we'll start to climb. We'll get to this level, pull back, and then probably start screaming higher. Now, that will probably happen very quickly, is my thinking. I think what we will see here over the next few weeks is a very strong bullish move to the upside because we are massively oversold here. And typically what happens when you overdo something in the market? Well, you overdo something in the other direction. With that being said, I do think we will see some bullishness on the weekly time frames kind of creep in over the next few weeks. I think we will see very strong movements, but I need to reposition this line as obviously it took out last week's lows. I will position it to the bottom of today. So if this is the end of the bearish move and we typically go up, you know, roughly 12.5, 14% to the bullish side after a bearish move, well, if we go back to that 440 number I kind of thought we would get to, that would be roughly a 15.5% move higher. I don't know. I mean, that's going to be a bit of a stretch as, yeah, that's outside the norm, but we also did just make a move. If this is the end of the move, 17.5% lower. And I don't know if that's the end of the move, right? That might be the other thing. Maybe we do break down early next week. But the other thing is I'm not going to be bearish as, you know, I do expect us to get a pop here over the next few weeks. And we just got to see what that pop looks like before we take other things off the table or readjust positions and that kind of thing. But I think one of the things that the bears had going for it was so much data over the past few weeks, and all the data has been pretty bad, especially the past 2 weeks. But now a lot of data is out of the way. There's been a lot of big time earnings out of the way. A lot of energy companies have earnings that are out of the way. A lot of tech companies have earnings out of the way. Now there is Nvidia with earnings coming up this next week, but there's not major stuff kind of going on. And also the massive buying that we saw towards the end of today, because the news headlines that you are going to see over the weekend is technical bear market. These are going to be things that you are going to react to. They're going to try and get you to react to them. That way they can get you to sell out of positions while they pump it up, right? And as they pump up the market, then you get back in up at these levels, and then they close out and they go short on everything. So that's not what we want to do. We want to stay calm. I get it. This week, Wednesday and Friday were tough. They were tough. I get it, man. I'm right there with you. But you just got to stay calm. Just know you're playing what you were wanting to see. I am wanting to see the bullish retaliation to this bear move that we've had. And whatever price levels we kind of get up into, then I'm going to make some adjustments, okay? But don't freak out. Don't panic. Just stick with your plan as far as like what we are wanting to see. Stay calm, and we'll make it through. I was actually joking with a buddy on Wednesday, man, maybe I should open up a midday live session where we just talk like therapy and the markets and stuff like that. But, you know, maybe that's future on down the line. But it was just kind of funny because it's just one of those things, you know, when the market sells down 4%, everybody's kind of feeling it unless you're, you know, on the right side of the trade. But my outlook is I do expect a very strong move here as we are really oversold in the bearish direction. So I would expect a very strong rally here over the next month and really kind of freak people out, and especially if we do get within that 10% number of all-time highs. Okay, now are we going to get to 440? I'm not sure. I'm going to leave this here for now, but we'll see how things maybe set up as we get higher up in maybe the 420 to 430 area. If it seems like the market's going to peter out, then I might just say, yeah, just go ahead and cut it. But I do like this for now. It just fits the narrative, right? The narrative you're going to hear now is we're in a technical bear market. Like we just went down 20% from all-time highs. So you're going to hear that narrative. Just realize that we just sold down for 7 weeks in a row. We just closed down 7 weeks in a row. So, you know, be calm, be patient, let things come to you, and then adjust and change your plan. Now, I did put out a video on Wednesday, basically just talking about hedging and how to hedge stock positions with options. So if you do want to kind of get your game plan, getting it going, definitely check out that video and have a great weekend. Alrighty, take care, Alpha Hunters.